Despite efforts by the Zimbabwean authority to increase the value of the local currency, citizens are still affected by the bad situation of the economy. For the last 10 years, the Zimbabwean government has been struggling to improve the life condition of its citizens. This latest improvement, according to the authorities, is due to the new programs initiated by the government. Details in this report.
Efforts by the Treasury to rein in inflation that had spiraled to a 10-year peak paid off in the latter part of 2020 as the rate of price increases retreated in successive months. Though it did not reach the targeted 300% by year end, it was still a boon for hard-hit shoppers.
That decline in inflation also tends to affect disposable incomes. So what they could buy in the beginning of 2020, in the second quarter and in the third quarter, obviously there is a huge difference because prices would have more or less stayed at the same level.
The gains were achieved by containing money supply growth.
The major driver of inflation in Zimbabwe in the past 3 years has largely been unabated money supply, which was beyond economic growth. Last year alone, money supply grew by over 103%, so that does push inflation. So now, most producers and retailers have been allowed to transact in foreign currency. So what it does is that it reduces demand for foreign currency on the parallel market, which was actually very key in pushing prices up.
However, the restoration of multi-currency regime had some unintended consequences, such as multi-tiered pricing. Shoppers here say because of the market distortions, the value of the local unit continues to be eroded, and that has diminished their buying power.
There has been an improvement for those who earn US dollars. But if you get paid in local currency, it's still difficult to make ends meet.
We hear that the local currency has gained against the US dollar, but it's all in theory. The reality is when you try and go and shop, you don't buy much because things are still going up.
Authorities will argue that the numbers show the increases are at a much slower pace than before, a trend they hope to maintain in 2021, where average annual inflation is projected at below 135%.